Hey guys, it's Lisa here. I'm going to walk you through how to scalp trade step by step. So this is a post that was on TradingView yesterday. So if you're watching this, it's on TradingView. So let me share my screen and we'll break this down. So this is the post. So this is the, it's a EMA MA scalp trade. So basically what we're doing is we've got alerts set, and I'll show you how to set those in a moment. Within TradingView, I've got a premium like membership. So I've got all access to every like indicator that I need. And I highly recommend having a paid TradingView account. On the non-paid TradingView account, you can use 3 indicators. So I would recommend using the EMAs and the 100 MA. And when it hits 100 MA, then converting that to the 200 MA to get upper targets. So let's have a look. So this is how we break it down. So basically we can see in this region here, where the cursor is hovering over, that the 9 and the 21 EMA have crossed over, which means that they are bullish. So we can see here that that's happened, and it's, you know, we would stay in that trade and we would keep pushing up our stop loss because this is a margin trade, and we want to be safe. And you know, as soon as we can get to normally these waves sort of come down, so you would enter this trade around here. You would put your stop loss down around this point under the swing low, and then it would continue up. So as it sort of fanned out in the waves, in the EMAs here, you would then push the stop loss up again. So, and as you can either sell up the top here when you can see that the waves are pushing down, or you can wait until you get the bearish cross and then flip the trade. So if we go down through here, I break down how this all works. So we can see that we've got this long trade, we've got a short trade, we've got a long trade here. We wait for it to fan out. It's gone up to we always target the 100 and then the 200 MAs. It's an easy target. When they're very congested, like in this area, it's a little bit hard to sort of trade. So I wouldn't recommend trading in this area. But we can see that here we've got a clear short signal where the MAs have crossed down bullish, and also the EMAs have crossed, bearish. The MAs have crossed bearish and the EMAs have crossed bearish. And we can see that there's quite a big dip. So we didn't get a bullish cross at this point. So we would continue into this trade for the bearish waves until we came down here. So we can see at this point we have a bullish cross and we've entered that trade and it's come up. So we would have exited this trade at this point, like pushing our stop loss up into that profit. So if we go through this, we can see that we had $190 per Bitcoin in this point. And so we would have exited, and you could have entered a bearish or a short trade at that point. So we can see in this area I've highlighted here, it's very congested. So all of the MAs and all of the EMAs are in the same point. The main thing that we want when we're entering a trade with the EMA, MA scalp, is we want to have either the MAs above or below the trade. So that makes it easier to target. So at this point, when we're entering, we can see clearly above, we've got the MAs are, you know, within that range. Even entering at this point here, we can target the 200 MA because we've got clear room above that we know that it's more than likely going to touch that point. It gets very risky in this region just due to the fact to the congestion of the indicators. We can see at this point when we've gone short that the MAs have crossed bearish, and then the EMAs have turned down bearish, and you can see that, you know, you've got a clear indicator of where those waves are going. So you would go up on higher timeframes at that point, and I'll show you in a minute, to get some targets and some ranges in these regions. So this is earlier this morning where we had this short overnight where the EMAs crossed down as shown up in this region. And then we've had an EMA cross down here. And again, we've targeted those MAs. At this point, when we've got the MA here, so this is a 15-minute chart. So then we would go to the 1 hour chart and we would target those MAs. So let's have a quick look at that chart. So at this point, we've entered this long. So the EMAs have crossed at this point. We've entered the long and then we've continued up. We've hit this MA. We've come up and we've retested it and held, and that's a really good sign that we're going up to the 200 MA. So at this point, we've come up and we've hit the 200 MA, and then we've come down and retested the 100 MA. So we know at this point now that we are about to go up and above the 200 MA. So it's a good sign of strength that BTC is moving as it should. Now this works on any margin traded or any alt, basically. They don't have to be margin traded. Obviously with margin trades, you have got bigger percentages, but they work on any trade. So at the moment, we can see that the EMAs are fanning out. So if we go to the hour chart now to get some additional targets. So we would see that at this point, we have the MAs. This was where the 200 MA was, and we are now going up to target this 100 MA. So our next target on this range, we would go to the hour chart and get 100 MA, and we're targeting 47,000. So we would also go to the next MA as the next target. So the 200 MA, which is higher again on the 100 chart. And that is at about 49,900 in this range. So that is what you would do. So once you have, it has secured the ranges of, you know, the 15-minute chart, and we are holding within, like if we go back into that 15-minute chart and we're holding within that pattern, within those EMAs and MAs, and we're testing within those ranges, we would then go up on the time frames and then test to go into the next sort of targets and the next ranges. And that's how we get the positioning for a reversal. So it's not always, we can see that in some regions here, you know, we have broken down. So we don't know it's a reversal until we're hitting all of these targets. And this way of trading is the perfect way when there's no direction and we're in a correction. It's a perfect way to continue trading with a low risk, as long as you're using a stop loss. That stop loss needs to be in place. So when you're entering these trades, you need to put them under the swing low. So if we're entering a trade at, we've entered here at this point long on the 15-minute. So if we go back to that 15-minute chart, we can see that we've entered around the 43,800-ish range. And we would put the swing low on this previous wave is here. So we would put a stop loss at 43,390, and then the wave should continue up from that point. So occasionally they do come down and retest, but usually underneath the swing low is a safe bet to put your stop loss. So, you know, if you're entering before you get confirmation, on a 5-minute chart, you need to have your stop loss under this region, under the previous swing low. So the bottom basically. So you would have that at underneath $43,000 at this range. So I don't recommend using the 5-minute chart. The 15-minute chart is, it's just, it confirms easier and it usually holds. And we can see by these waves that are moving, once the waves sort of fan out, we continue up. And we've got that fan within the EMAs at the moment. So if we go to Investopedia, we can see that a moving average is basically the calculation used to analyze data points, creating a series of averages. And that's why the waves come and touch those points all of the time. So basically it's an indicator that we know that is going to hit and is going to sort of, you know, the waves are going to bounce off there. And that's what the moving average does. So the EMA, the exponential moving average, which is the 9 and 21 on the chart. So the MAs are the 100 and the 200 that I have on the chart. So the EMA is a type of moving average that places a greater weight and significance on recent data points. That's why it's so valuable on this 15-minute chart. So basically, as we go through the chart, it comes through and it hits, and it's a really good indicator to use in these low time frames. I know people use them on the higher time frames, but EMAs for me are used on the 15 and 30-minute charts, and they're highly accurate. MAs you can use on all charts. I use them like on the daily, on the 4-hour. And as we do go through the EMAs and we confirm the MAs, I go up through the time frames. So any questions, guys, please put them under the video. I'll put the links to the EMA and also the MA here, and I'll put the links to this TradingView if you want to have a read. So how we go about adding the alert on the premium TradingView is we right click the moving average. So it says add alert. So we want to create this strategy. So we've got the EMA 21 close. We want it crossing. So the value we want crossing is the EMA 9. We want it once per bar. So every time that crosses, it will then send you an alert. So it notifies on the app. It also shows a pop-up on my screen. You can get it to send an email or a webhook, up to you. Then you go create it. Then every time this EMA crosses over up or down, we then see, we get that alert and we know that we need to enter or flip that trade, so short or long. So thank you for watching, guys. Good luck with this strategy. It works well. Make sure you use stop losses always, and happy trading.